This is Eileen Griffin with the Heartland View from the Heartland Daily News. This week's featured stories, like all that we publish at the Heartland Daily News, provide information and analysis about breaking public policy events and issues that affect your life, your health, your freedoms, and the nation's economy. So let's jump right in. We're going to talk a little bit about economic news. We do have a story out of Pennsylvania that I think you'll find interesting, and we've got some updates on small business. But let's get going with the economy. The near-term economic outlook remains positive. Unfortunately, the longer-term outlook is significantly worse. The Democrats' policy agenda is clear. They won the election, and they'll adopt their policy. This means vast new increases in government spending and regulations, an increase in the federal minimum wage, and if they're still in charge when inflation emerges, the return of price controls. As we prepare for the dire outcomes of these policies, our challenge as individuals is to stay with the positive trends as long as possible and adjust the negative long-term implications before they become obvious to financial markets. We should also support organizations that are trying to inform the public about these agenda issues, such as the Heartland Institute, publisher of the Heartland Daily News. The economy and earnings are both growing at a rapid pace, and new orders are rising. The upward momentum is the result of a highly expansive monetary policy at the Federal Reserve, a favorable tax policy implemented by President Trump and the Republicans 4 years ago, and massive increases in federal spending. Increases in federal spending provide an immediate stimulus as the dollars hit the economy, but within 6 to 9 months, this stimulus spending has a depressing impact on the economy. The massive creation of money has helped bolster the economy and the stock market amid government-mandated lockdowns. But money can temporarily keep the economy operating. As with spending, it's a short-term fix with negative longer-term implications. Employment growth has lagged the rest of the economy in the current rebound. Much of the weakness in employment is in leisure and hospitality industries. The virus has hit these industries hard. In addition, government programs that pay people more than they could earn working add to the unemployment. Another factor keeping unemployment high in the future will be the promised increase in the federal minimum wage. Businesses are likely to accelerate the type of investments needed to mechanize as many jobs as possible to avoid future labor costs. The lack of jobs for low-skilled workers will price many out of the market, increasing hardship among those most vulnerable. The longer-term negative implications for the economy won't become apparent until beyond mid-year at the earliest. It's necessary to monitor policy trends closely to determine how quickly and how damaging the new policies will be. Last year marked the end of the last round of pro-growth economic policies. With the massive increase in money, in federal spending, and in government controls over the economy, we enter a new cycle. This will be the 6th time since 1913 that we'll adopt policies that move the economy away from pro-growth, free market, and classical principles. As with the previous 5, the main victims will be the poor. The false lesson our nation appears to have accepted is that we can create prosperity by relying on the generous policies of our government. Sometime between April and September, we'll find out to the extent which Joe Biden and the narrow Democratic majority in Congress will go towards adopting their agenda. As policy changes move through Congress this year, we'll be in a better position to anticipate both the timing and the extent of the damage. Most monetary indicators confirm Fed policy is highly expansive. The only exception is yield spreads, which point to a slightly restrictive policy. The Fed's control over interest rates is probably a factor in distorting the normal reliability of yield spreads in measuring policy. The Fed has indicated it intends to keep interest rates low and provide sufficient money to boost the economy through at least next year. Even if short-term interest rates remain low while spending accelerates, look for longer-term rates to creep up slowly in anticipation of an increase in inflation. On balance, the explosive increase in liquidity continues to provide a strong tailwind for both the economy and the stock market. Amid ongoing lockdowns, a surge in COVID cases and deaths, and political turmoil, the economy has managed an amazing rebound since April of last year. The economy's momentum is still fairly strong, and new orders indicate the strength will continue into the spring. Unfortunately, the good times won't last much beyond that. Now we're going to talk about small business. The Small Business Optimism Index from the National Federation of Independent Business fell to 95 in January, the 3rd consecutive decline, following back-to-back readings of 104 in September and October. The latest result is well below the 1986 through 2006 average of 101. Details within the report suggest that small business owners are concerned about future general economic conditions and about their own business. Within the details of the small business survey, the net percentage of respondents expecting better economic conditions fell to -23 in January versus -16 in December. This index has been as high as 39 in June 2020, but now is at the lowest level since November of 2013. 22% of firms have planned for capital expenditures over the next 3 to 6 months, unchanged from the prior months and excluding the initial lockdown period, the lowest result since March of 2015. The percentage of firms planning to increase employment was unchanged at 17% in January. A substantial 33% of firms still report having openings they are not able to fill, despite the elevated levels of unemployment. The results suggest there's a skills shortage in the United States. That skills shortage has 25% of firms saying they have already increased compensation over the past 3 months, while 17% intend to increase worker pay in the coming months. The skills shortage is also keeping quality of labor at the top of the most important issues for small businesses. Among the 10 issues listed in the survey, quality of labor again ranks first at 21%, 6 points below the survey high of 27%. Taxes were second at 19%, while government regulation was third at 15%, and poor sales was fourth on the list at 11%. Overall, the survey suggests that small business sector of the economy is a bit more cautious about the future. Still, while small businesses may be growing more cautious about the outlook, they are looking to hire employees and make some capital expenditures. Though according to the report, conditions vary widely by industry. Finally, despite the weak labor market, a shortage of skilled workers continues. Our story out of Pennsylvania, Budget and Tax News reports that voters in Pennsylvania will soon get to decide the extent of their governor's emergency powers. A constitutional amendment requiring the governor to seek legislative approval before extending disaster declarations beyond 21 days cleared the last hurdle. The House will send it now to a ballot referendum in the upcoming primary election scheduled for May 18th. Senate Bill 2 also includes another amendment that expands discrimination protections on the basis of race or ethnicity. And the third says the General Assembly can overturn a disaster declaration without presenting it to the governor for signature. The latter is a direct result of a court battle legislative Republicans lost this year when Governor Tom Wolf's 90-day emergency declaration remained even after the General Assembly approved a concurrent resolution ending it. Wolf has extended the order 3 times since the pandemic hit in early March. The prime bill's sponsor, Senator Scott Martin, said, quote, "Throughout the pandemic, the voices of many Pennsylvanians have been silenced by Governor Wolf's unilateral actions and arbitrary orders," end quote. He also said, quote, "Now state residents will have an opportunity to ensure that their voices are heard," end quote. The constitutional amendments come after Republican majorities in the House and Senate tried and failed to strip back most of Wolf's economic restrictions enacted throughout the pandemic. The restrictions were seen as some of the toughest in the nation, and they spiked applications for jobless benefits to more than 2.6 million over the year. Quote, "We have seen the consequences of one person or one branch of government wielding too much authority for an indefinite period of time, and the results are not good," end quote, Martin said. The governor has said that the amendment wouldn't impact public health orders to wear masks, social distance, and restrict certain economic activities. Still, he said, the policy jeopardizes critical federal disaster aid and hamstrings the state's ability to respond quickly in an emergency. He urged the Republicans to quit hyper-partisanship. Quote, "If the House GOP is successful, Pennsylvania would be the only state without some type of emergency in place for COVID-19 and could lose out on federal funding for businesses and individuals in future COVID-19 relief packages," end quote. Republican leaders in the House agreed that the Department of Health can still order restaurants and bars to close because they have jurisdiction over liquor licenses. But the constitutional amendments bring lawmakers to the table. At least now they have a voice. And that's it. That's our report for this week's Heartland View. As always, if you'd like to see the full version of these stories as well as many others, please go to our website, heartlanddailynews.com. And if you'd like to support an organization that's working for your freedom and protecting rights, please consider supporting the work of the Heartland Institute. Go to our website, heartland.org. Thank you for your time. Have a great week.